something like Solana, I think, is a great buy right now, given that it's got a lot of growth metrics trending up. And so that's what I'm going to be watching over the next couple of months is, who's continuing to grow through the bear, who's continuing to build and ship code. And then that is going to be the driver of the price.
All right, everyone. Welcome back. Justin and I just finished up an awesome interview with Matty Taylor, the head of growth at Solana. And now we're going to unpack that interview. If you haven't listened to that conversation already, be sure to check out that video first and then come back here. We got the link down in the description. So Justin, Matty was talking a lot about decentralization and how for ETH, Coinbase and Lido are validating most of those transactions. What's your take there?
Yeah, I think it's a really valid point because what you have with Ethereum right now is users effectively delegating their tokens to these other entities. So even though Ethereum doesn't have delegation in its proof of stake, it sort of de facto does because of users leaving their coins on Coinbase and staking with them, or giving their coins to Lido, staking with them. And so you end up with these big entities that just control a lot of the stake in the network, that run a lot of the nodes. And obviously that's not what we want from a decentralization perspective. So Solana makes this explicit because you can just go down the list of validators and say, okay, I'll stake some to you, stake some to you. And you can see, does your staking actually harm the decentralization of the network? And there's a nice little line on the main Solana validator dashboard that shows you want to stake to people below this line, because anyone above this, is part of the core group that if they all colluded, they could halt the network. And so that's that Nakamoto coefficient that Matty was talking about. And so right now, by any way we can measure it, Solana has a higher Nakamoto coefficient, a more decentralized measurement of this. How many entities does it take to take down the network? So Ethereum's got some work to do to make it in that front. There's been a lot of criticism towards Lido for kind of perpetuating this, and towards like Coinbase and Binance. I do like what Rocket Pool is doing. They're sort of the decentralized proof of stake system, stake pool, as they call it, for Ethereum. I'm not as familiar with their architecture, but I hear less people complaining about that one as it goes towards decentralization. So potentially that's a way for Ethereum to remedy itself. But of course, the Ethereum proponents would say that the node requirements of Solana are really the challenge. If you need a $5,000 server in a data center to be a node, that's kind of a problem for users who want to validate the state. Because right now, when you pull up your Phantom wallet, you're trusting that RPC node provider, that's telling you, here's your balance, here's what NFTs you own, right? All that information is coming from some trusted Solana node. And yeah, you can choose different Solana nodes. And generally when you go to a website, if you go to, like the Mango Markets decentralized exchange on Solana, you're talking to their node. So they don't necessarily have an incentive to show you false information. But that is just another level of trust. It's very similar to MetaMask in Ethereum. When you use MetaMask, you're trusting Infura and their servers running on Amazon to tell you the truth about what's going on in the network. But at least with Ethereum, it's not that hard to run your own node, and then you can get access to the blockchain state in a decentralized fashion. So I think this is another area that Solana needs to improve upon if they want to really convince people that it's decentralized enough for a lot of these use cases.
I mean, another thing we were hit on was composability, right? And it kind of just always takes me back to, it works until it doesn't work, right? And so I always come back to this because it's just all I kind of come across here is you can settle everything on that base layer until there's too many transactions, right? And it doesn't make sense. What is your take there on what he said?
Yeah, I think it's sort of a work in progress in pushing the limits of the network and seeing what use cases end up there. I mean, he did comment that Solana is not trying to be a winner takes all chain. It's going for a specific use case. And right now that seems to be DeFi and gaming. Those are kind of the two biggest areas that he called out. So I think in that respect, Solana could carve out its niche and have this high-speed DeFi and these high-speed social gaming experiences running on the chain. But the long tail of crypto assets and digital transactions, things like that, kind of exist in this broader multi-chain world. So it's not that Solana has to support the whole entire world's transactions per second. It just needs to carve out its niche and support that well enough. And I think it's got a pretty good shot at that, running all on one chain without any sharding, without any rollups, just being that beefy blockchain that it is trying to be. and giving users the real high speed experience that they need for those types of applications.
It was interesting also that, when it comes to these different applications, that he seemed to think that real world assets may be like more longer out in the future, where a lot more crypto, DeFi native applications will be more prevalent or whatever over the next 3 to 5 years. But we've kind of like lacked to see those applications. So what do you think are some of those ones that may step in over the next few years, besides stepping?
Yeah, I was about to say. Yeah, I mean, I think in terms of digital native assets, we've already seen the DAO tokens get a lot of popularity in terms of like what people are trading and holding and using on chain. So I think that's going to continue. And that's sort of, you can view it as a competitor to traditional equities. It's a very similar type of structure where you get, governance and cash flow rights over that project. We're also seeing a lot of more gamified utility tokens like StepN and some of these other decentralized gaming ecosystems with their own tokens and their own NFTs even. All of those digital assets, of course, I think are going to continue to be popular. And those are as digitally native as it gets. When it comes to real world assets, I think the challenge is that you have to have these really big, old, archaic institutions support a very new and breakneck technology. I mean, in terms of the pace of change that these technologies are going through. And it's just hard for them to really set up the infrastructure to support that. I think it's coming eventually. And potentially we might see this soon with MakerDAO, where they're trying to onboard some real world assets in their collateral system. So people can borrow against that, and so that they can back the DAI stablecoin with a more diverse portfolio. But it remains to be seen how well this is going to work and how receptive the crypto industry is to it, because you often hear a lot of people say, well, it sort of defeats the purpose of something decentralized if you've got this centralized custodian that could just walk away with the real world asset and not honor the on-chain obligations. So that's really the challenge, is connecting those two and convincing people that it is worthy of being on-chain.
Yeah, I think a part of it is, though, bridging the gap until it can actually be fully executed on chain, right? And so I think there's going to be that part where things will need to happen off and on until at some point in the future.
Yeah, I mean, I think we really need a government to step up and create some laws, that are actually enforceable in court to honor the on-chain obligations. Maybe one of these smaller, more crypto-friendly countries like Estonia or Switzerland, maybe one of them could do it. And then you could have a custodian bank in those countries that is legally obligated in their own legal system to honor the on-chain obligation. So that if you own a bond token that is custodied by this bank, you can actually redeem it in the real world for a bond, and you don't have to worry about them running away with it or the laws making it murky.
So basically trying to use a trusted custodian as an intermediary, right?
Right. Yeah, we needed this trusted custodian that is actually bound legally to honor that, because otherwise it's really unclear how that's going to hold up. I mean, I think in US courts right now, nobody really knows how this would go.
And everything always takes a couple of years to figure it out. No one wants to take a couple of years to get their collateral back.
Right.
Well, Solana phone. We hit on the Solana phone. It'll be interesting to see where it goes. I actually seen something I thought posted too about ETH on some other project on the phone, Android also. I'm not quite sure. But what do you think here? Do you think that, a certain percentage of users will at least use it, maybe adopt it, and then ultimately it leads to something bigger over time?
I think that's probably the most likely scenario. We're definitely going to see just crypto power users and developers getting on there first. I think that's basically who pre-ordered it, was these, developers interested in building mobile apps for the ecosystem. And given that the Solana Foundation is not exactly a tier 1 hardware developer, the Solana phone is not going to be exactly the best Android phone out there. You're better off going to get a Samsung or something if you want a really high quality phone. So it's going to kind of sit in this weird middle ground of, it's just an okay Android phone, but it has really good crypto features and crypto UX. And so that's why I think it's mainly just going to be the power users first. But if we see some really viral crypto mobile apps take off that are really only viable on these Solana phones, that could be what pushes the bigger ecosystem, the bigger Android ecosystem, and maybe even Apple to implement some of these features in their next generation of phones. I mean, it would be great if we can have a true hardware wallet inside of an iPhone. That would allow us to not have to carry around your laptop and your Ledger Nano, right? You could have it on your phone. And that would really enable next level UX for crypto users, being able to do everything on your smartphone and not having to worry about that private key just kind of sitting there ready for any virus to take it.
So possibly the unbanked might actually be the biggest customer of this phone in the future.
Yeah, that's a good point. If you look at a lot of the third world countries, South America, Africa, Middle East, these countries where people don't have access to premier banking infrastructure, the Solana phone could be what brings these people into a first tier level of access to financial infrastructure. It certainly would be a lot better than the crappy Android smartphones I'm sure they're using right now to do crypto transactions that are pretty insecure. And I'm sure a lot of people have gotten hacked or lost funds through that. It would be great if we can see all of these unbanked people get access to DeFi and lending, money transmission services through something like the Solana phone. I think that would be a great vision and message for crypto to appeal to the broader public.
What is happening in the market right now? I mean, Bitcoin is obviously trending sideways. For every 1,000 points moves up or down, everyone thinks it's going to either shit the bed and go to 10K or move up pretty quickly. Everyone gets bullish and bearish for every 1,000 points in every direction. What's your take on how should maybe people be looking at the market?
Yeah, you certainly have a lot of people calling for, another minus 50% before we hit the bottom. And you have some people saying we're at the bottom right now. I think that if you take the consensus view of all of our, our favorite traders and macro people or whatever, it's probably not the time to go all in. But I do think that prices are at a discount compared to where they should be in the long term, especially for something like Solana that is just growing at a breakneck pace. And as Matty mentioned, that there's a lot of growth metrics that are still trending up for Solana, like daily active users and NFT trading volume, things like that. So that's really a good sign that it's growing even through the bear market. And a lot of people have this view about the crypto market and the whole crypto industry that we're going through this deep, dark crypto winter and everyone is just going to be miserable and there's no growth and we're going to be just bleeding users. I don't think that's going to be the case at all. I think crypto is going to continue to grow at an exponential pace throughout this bear market, throughout this global recession we're finding ourselves in. And that is going to be key to driving growth in price. As we all understand about the layer one tokens is that generally the more economic activity you have on chain, the more users, the more bullish it is for that token. So something like Solana, I think is a great buy right now, given that it's got a lot of growth metrics trending up. And so that's what I'm going to be watching over the next couple of months is, who's continuing to grow through the bear, who's continuing to build and ship code. And then that is going to be the driver of the price. The other thing I'll mention is that we still have some fallout from these centralized lending shops that went belly up. So people have been watching on-chain activity from Celsius. They have been liquidating certain assets like some of their Bitcoin and some of their staked ETH holdings. People are watching those, get sent to exchanges and then get dumped, and then stable coins come out and they pay off debt in Aave and things like that. So there is still some unwinding going on from a lot of these over leveraged businesses in the space. But I do think we're near the end of that selling pressure. And this potentially marks a local bottom. I don't want to say this is the absolute bottom, but I think that anyone that has been looking to deploy capital into these projects for long term, I think over the next month or two, we'll probably have a good point to deploy capital for people looking to do that.
I mean, how do we kind of step back and even look to maybe value when we see like Solana and Ethereum, right? Like where one, I mean, if they are processing the same transactions, right? I mean, how do we kind of look at valuation when Ethereum is, multiples higher right now, but maybe someone says it's more decentralized, maybe not. How does the market actually evaluate this? Do they evaluate it more on time tested, how long it's been around, or how do you see this maybe shift over into the next cycle?
Yeah, I think potentially by the next cycle, we'll have a clearer vision on this. But right now, there's no consensus way to value an L1 token. But I'll tell you my own thoughts on it, which is that I think that it really comes down to the on-chain GDP, if you will, of that network. So that would mean, what is the total revenue of all the apps running on this network, and how much transaction fees are people paying to the network? So when you look at a token like Ethereum, the reason why you hold Ethereum is because you get a cash flow, in a sense, from the transaction fees. So people have to, they burn the ether, right? When you pay a transaction fee, that ether gets destroyed, but that increases the value of all the other ether. So just by holding ether, you're sort of indirectly getting that transaction fee cash flow. And then when you stake ether, you get that extra 5-6% APY on top of that. And so it's really a cash flow play in a lot of people's minds, which is the transaction fees. And what drives those transaction fees is applications that are generating a lot of revenue. Why would users be paying the transaction fees? It's because there's money to be made. There's economic things to do. There's NFTs to flip. That's really what is going to drive those transaction fees. And so as sort of a leading indicator to that, you can look at some of those metrics that Matty mentioned, like the daily active users and all of these growth metrics of the chain usage. I think that is a leading indicator of GDP, if you will, on chain. The other component I think that does matter for L1 price, and potentially equal, if not greater than the cash flow aspect of it, is its use as money. And you'll hear this a lot from the Ethereum camp, that ether is money. And, I don't really care how many times you say it, that doesn't necessarily make it money. But when you get a large enough group of people that are using it as money, it does confer a monetary premium to that token. And so you can look at things like OpenSea, where people are buying NFTs priced in ether. And when you price things and you make it a unit of account, that does kind of give it a moneyness. And a lot of people are certainly holding ether as a store of value that is very useful, because you can use it in all these DeFi things. Like you can borrow against it. You can get access instantly to liquidity for other tokens. You can stake it and get a yield. So as a store of value, people do find it pretty useful. And so that's really what you need. You need that unit of account, and you need the store of value, and then the medium of exchange, of course, using it to buy and sell things. So I think as an L1 grows and it's got more apps running on it, it's going to get this moneyness property, and that will give it a monetary premium.
Dude, so excited. So excited where this goes in the next 10 years, right? I mean, I hope everyone listening is just as excited. I mean, it's like we can't even see what's really going to come out of all this yet until it's hindsight, right? I mean, like in 2030, I'm sure we'll be looking back at this decade, all the crazy things that have happened in technology as a whole, not even just in blockchain, but just, hopefully that self-driving car is legitimately doing everything for us, right?
Yeah, I definitely think over the next 10 years, we're going to see some wild and crazy shit in the crypto world that's just going to totally blow people away. Crypto has this tendency to really surprise people with some new use case or some app that goes viral. I mean, DeFi summer just kind of came out of nowhere, right? It was just sort of this lull from the previous bear market. And then suddenly everyone is doing this thing called yield farming and liquidity mining, just out of the blue. And it really just took off over the course of a couple of months. Crypto has this nature to it that once something does go viral, it can really reach the entire world very quickly. And part of that is just the nature of our internet connected society. But crypto really utilizes that better than anything else, given that it's an internet native technology. So yeah, something is going to come out in the next couple of years. It's just going to totally surprise everybody. And it's really going to change the game for crypto. And 10 years from now, it could look totally alien from what it looks like today.
Dan Moorhead, I think, just came out and kind of commented that possibly that while stocks, real estate, and certain assets may still trend downward over the next year or so, that crypto could kind of decouple from that and maybe actually rise over the next year or so. I mean, that is definitely going against the grain or counter trading everybody. And kind of, what is your take there? Is that a possibility because people are getting so bearish?
Yeah, it's certainly a possibility. I think the challenge is going to be finding the marginal buyers, the people that are going to want to buy crypto, after it's already suffered big losses and it's got everybody freaked out. we're going to have to hit some sort of bottom and just sort of go sideways for a while, to sort of build people's confidence that when they buy, it's not immediately going to take a minus 50%. But we may see this sort of there is no alternative aspect, or TINA you might see on Twitter. And this is just basically the idea that there's really no better place for getting exposure to growth than crypto. Given that the technology is moving so quickly and that it's got these exponential drivers behind the growth, we could see a lot of people reallocating to crypto from other sectors, and maybe even from currency holdings in light of inflation, and sort of give it a premium. Right? We've lost a lot of premium recently. That was more of a speculative premium, but we might regain a premium on this, being the best growth vehicle in a world that is surrounded by economic recessions.
I agree there. What else we got, man? What else we have for today that we want to throw in here? Anything?
And what else has been going on in the crypto world?
Dude, I feel it's just like slightly stale, right? Everyone's kind of waiting right now to see if 3 Hours Capital is when hibernation, committed suicide, or the Chinese government took them away. We don't know. Or what's happening these days, right? But those guys may be actually hiding based on some news articles, right?
Yeah.
Celsius is still yet to come out of their hole, hiding again, probably trying to figure out the best moves for himself, to try to get out of this unscathed the least amount. And obviously Voyager has filed and, sent out an email to everyone that had stuff on Voyager to try to, at some point, to send back some certain percentage of assets. I don't know what the heck's happening outside of that.
Yeah, I think everyone was just kind of in a wait and see mode. Wait for this fallout to be over with and see how the regulators respond, because there's certainly been a lot of commentary from regulators on this, and they could come out with some pretty annoying regulations for the crypto industry that nobody really wants, but they feel like they have to do because their job is to regulate. So that kind of feels like where the market is. It's just everyone's just sort of on hold until we kind of settle down and we see the full extent of who went bankrupt, and who's on the run.
I think also it's summertime here in the USA for everybody. And so it is the slower period of the year. And I think people are just burned out from the bull cycle, that everyone's probably just trying to drift off, hang with some family, and go to the beach and do certain things and have a little bit of fun before any new action in the future shows back up, right?
Yeah, right. I mean, some people say the only reason we got DeFi summer is because everyone was locked in, and quarantined or whatever, and had nothing else to do than flip shit coins. But I'm still positive that we could get a Solana summer going on. There's been a lot of NFT activity that people have been excited about. Step-in, people have been really excited about. Maybe if everyone's outdoors, getting outdoor recreation in, they can use Step-in and get a little boost there. So we'll see. Summer is still young.
Well, thanks for joining us again. And that's a recap on the Solana Labs interview with Matty. Hey, everyone. Thanks for watching my latest interview. If you like what you saw, please click the subscribe button below to become a member of the Joe Robert community. Be sure to hit the bell to turn on all notifications so you always know when I post a new video. Tell me what you thought about the content in the comments below. I always read them and would love to answer any of your questions.